Hey, what's up guys? John here. Credit card defaults and delinquencies are at the highest rate in American history.
Millions of Americans are feeling the financial sting of mounting credit card debt.
Americans are struggling to keep up with their credit card payments, and delinquencies are on the rise.
Far eclipsing what we've witnessed during the great financial crisis, 2008, 9, and 10, when many people thought this is the biggest crash in 100 years. This is all coming from the National Bureau of Economic Research. So they're telling us consumers are in very big trouble. Look at auto lenders, they're telling us same story, that borrowers are in very big trouble, and delinquencies and defaults are at all-time highs.
Americans are struggling with the rising cost of everyday items, falling behind in some cases on expenses like car loans and credit cards.
So you have credit cards, you have auto loans, both in big trouble. You have $2 trillion worth of corporate debt that is getting refinanced in the coming year or two. And so when you have all of this coming at the same time as the job market's falling apart, you can realize we're likely walking into a really big crisis. But what banks are doing right now says everything, because banks are closing branches at the fastest pace in history.
National Bank will be closing one of its downtown locations.
Banks set a record by closing nearly 4,000 branches last year.
In fact, there's a set date for when all bank branches will close. I'm going to break this down for you. I'm going to show you exactly what is happening. Even Dave Ramsey himself is talking about this. Are we really headed for this? Now, when you have Dave Ramsey, I would say a mainstream financial talk show host, talking about the changes that are coming, the writing's on the wall. The writing is on the wall. I'm going to break it down for you. I'm going to help you and position you for what I believe is going to be a very different type of economy. Please hit the like button. When you do, YouTube will share the content, educate more people about what's really happening. You know, I made many bold predictions in the past, most of which have come true, and I think this is going to be the most shocking prediction that will come true. In July, a report on the fall of Denver and the fall of Ohio, 2 months before the media. In 2023, I predicted federal rent control would come and food price controls would come to combat inflation. The White House is now working to make both of these laws.
Passed the first ever federal ban on price gauging on food.
My incredible team provides tomorrow's news today. Only 30% of all viewers are subscribed. If you subscribe, the algorithm will reward the channel and we can expand and grow and hire more researchers. Thank you for simply clicking the red button to subscribe to the channel. Now on to the video. Even BlackRock, they just came out yesterday and said, BlackRock Fed cut signals market recalibration. The recent rate cut by the U.S. Federal Reserve represents a recalibration of monetary policy, which slightly increases the risk of some private credit defaults. They're talking about, the defaults likely coming. The CFPB, Consumer Financial Protection Bureau, takes aim at ATM debit card fees. Regulators should assume, as a default, that customers have not agreed to cover the fees unless banks can provide signed agreements or recorded conversations, the agency said in a policy reminder. Now, what is happening? You've probably heard about this. The bank's charging late fees between $32 and $35, and they want to reduce it to $8, and insufficient funds fees, and they're moving in this direction. If this does in fact happen, there's going to be less revenue generated per consumer for these banks. And so what are banks going to do? As their profits are shrinking and their defaults are climbing, well, they're going to close down branches. They're going to look to cut expenses. Look at Project Bora Bora with Citibank. They're talking about laying off tens of thousands of workers. Look at JP Morgan Chase. Same exact scenario. They're moving with AI assistants for their employees to help assist them, because everything is going to come down to saving money and cutting costs. It says banks must maintain evidence that customers have opted into an overdraft coverage. The Consumer Financial Protection Bureau said on Tuesday, banks have charged overdraft fees for ATM and one-time debit card transactions, even though they did not have customers' documented consent. The agency is fighting what it calls phantom opt-in agreements, in which banks claim they obtain customer consent to charge fees on overdrawn accounts but have no proof of the accord. Then you have this. Prefer to deposit checks in person? Bank branches may soon be hard to come by. 2 days ago, stopping by the bank to make a quick deposit may soon become a relic of the past, according to a new study. Finance and credit building company Self Financial recently released a study using data provided by the FDIC on consumer banking trends. Researchers obtained records dating as far back as 1934 and surveyed over 1,000 Americans to get the information compiled in a report which shows one clear overall trend. In-person banking is currently on the outs. Right? That's what's happening. Here, just a few weeks ago, as of December, the number of bank branches in the U.S. had shrunk by more than 1/5 compared to 2009. More have closed since between Bank of America, Chase, U.S. Bank, Capital One, PNC, Wells Fargo, and TD. Another 400 plus have already closed. Now, this is what's shocking. Came out a week ago. U.S. could lose all bank branches by 2041 as closures surge. So, according to new data analyzed by Self, right, average of 1,646 bank branches have closed this year, have closed each year since 2018. States of California, Florida, Illinois have been hit the hardest, with California seeing over 1,100 closures in the last decade. The decline has accelerated in recent years, with the pandemic contributing significantly to the shift towards online banking. The data comes from a study of commercial banking trends provided by the Federal Deposit Insurance Corporation. As of 2022, the U.S. has 69,590 bank branches, a sharp drop from 82,000 in 2012. So it went from 82,000 to sub 70,000 in 12 years. If this trend continues, experts project the physical bank branches may become extinct by 2041. Now, when you look at what Goldman Sachs did, they just took a $400 million loss on their consumer lending business. They're focusing exclusively on high net worth individuals. I believe if you're a high net worth individual or a wealthy person, there's going to be in-person options. But I think that most consumers that are low income are going to probably be forced to go to online banking. If I were a betting man, that's what I'd bet on. It says, why are so many bank branches closing? There are a variety of factors at play, including a shift towards online and mobile banking, increased automation of financial services, and efforts by banks to cut costs and streamline operations. The pandemic accelerated this trend. Now, look at what happened in Australia. Fast-growing Aussie bank starts major overhaul as all branches lose cash ahead of digital-only deadline. Right? This is Yahoo Finance talking about this. Macquarie Bank. Customers will be stopped from withdrawing and depositing cash or checks at its branches around the country from this month. Australia's 5th largest bank revealed last year. The rise of digital payment systems has resulted in them pivoting away from loads of in-person banking processes. The announcement didn't go down well, with fears of older Australians or those who live in regional or rural areas would suffer. But a spokesperson told Yahoo Finance the bank's plan to be solely online by the end of the year was due to how customers preferred to do their banking, right? It had nothing to do with anything else. It's because that's how customers preferred, right? As a digital bank, we're committed to transitioning to completely digital payments in 2 months as a safer, faster, and convenient way to bank. The majority of our customers already bank digitally, and we're working very closely to support the less than 1% of customers who currently use checks or cash to ensure that they have access to other digital payment methods. Telephone banking was phased out in March, and customers were stopped from ordering checkbooks for new cash accounts back in January. Now, when you look at how fast this situation is growing, you'll realize that we're going to be walking into a storm, and this upcoming economic crisis that we're going to step into. These banks, they think about it. If they're running a location, they have 10 employees, they're paying each employee, say $20 an hour, $200 an hour just to run, right? They're spending thousands and thousands and thousands of dollars a day in human labor, in insurance, in taxes, in their utilities. You start to look at the amount of money that they're spending. Why? Why would they spend it when they could just run everything through an app and have everything essentially automated with AI chatbots, right? That's exactly where it's all going to go. Banks are going to be able to reduce fees if they want, and they're going to be able to, fight over market share. They'll be able to do basically whatever they want, because the cost to run and operate a bank is going to probably drop 70, 80, 90% in the coming decade or two. And so if they want to keep the fees where they are, they will. If they want to increase them, they will. If they want to reduce them to, gather more market share, they will be able to. But we're going to be walking into a major shift throughout banking. Here it says there were 77.9 million cash withdrawals in December 2008, and that figure has gradually declined to 29.7 million as of June last year. The consumer sentiment tracker found that only 13% of Australians used cash daily, with 31% opting for cash transactions just once a week. Well, I was in in Colombia a few months ago, maybe five months ago, 6 months ago. And almost every transaction was cash, almost every transaction. Now, sure, some countries are going to prefer to pay credit card, debit card, use online apps, things of that nature. But when you start to look at the change and you look at the amount of countries that are moving digital, you'll realize that without doubt, this is going to be a global shift. And Australia, I believe, is the first one. The second is probably going to be maybe America. We'll probably see some states like California or New York probably bring this, and then it's going to continue to probably hop from one state to the next. But you just think about what this would mean. If you're unable to go to a local bank branch to deposit a check, take out cash, I mean, it's kind of frightening. You really kind of think about that. Everything will be on one specific app, and that one app will basically control everyone. You won't be able to see a real person face to face. Let's talk about this below. Do you think that this is going to happen before 2041, as they report here? Or, I mean, this is a mainstream article, mainstream company, mainstream media company talking about this, that this is what's coming. Let's have a conversation about this. And if you'd like to fix your credit to position yourself, what I believe is going to be a different type of world. I think we're going to see credit contract in a very big way. I think we're going to see lenders pull back, auto lenders pulling back, mortgage lenders, banks, credit card companies, across the board as defaults continue to soar in America. They're going to look to take some risk off the table. So if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, or repossessions, or any derogatory or negative item on your credit report, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. Catch you next video.